Jordan garnered a lot of the attention early at the forum's opening. Another topic has been gaining a lot of momentum, and that is tax. Our next guest says it's a matter of when, not whether, Dubai will introduce VAT here. Well, I met up with DLA Piper's regional managing partner, Abdul Aziz Al Yaqout, and began by asking him how subsidies could be part of a taxation system.
Let's take petrol, for example. 50% of the petrol you put in your car is paid for by the Dubai government. And I'll be very honest, I don't need that for me. I would rather that this revenue goes into expanding projects or expanding the city, maybe helping people who really need it. So insofar, I would find it very good if government would look again at the subsidies that are there. I mean, if you look at the UAE as a whole, 6% of GDP is going into energy subsidies alone. In Kuwait, it's 7%. In Saudi Arabia, 10%. If you take the MENA region, we're talking about $250 billion per year that energy is subsidized.
So you feel subsidies are still an important part of GCC life then. Should they potentially be calculated, say, on somebody's income? If you are above a certain income bracket, perhaps you don't have access to the subsidies or a lesser extent.
I think that would make sense, for example. If you take energy, that you say if someone is making a certain amount of a salary or has a certain amount of income, that his energy consumption is not subsidized. Or that you say people below a certain income level do get grants from the government in order to pay for their energy needs. I think that makes absolute sense, and that's clear, and that is a given that that type of policy should be in place.
Do you think the government will look at putting that kind of policy in place?
I think that throughout the GCC, the governments are going to be looking at being much smarter and having proper fiscal policies in place. This will include looking at subsidies and rejigging subsidies in a form which make more sense, are much more intelligent. But I also think that there will be an introduction of taxes, and very much likely VAT.
And of course, people are very nervous about the introduction of a VAT tax. How do you think that could be introduced at such a level so that it's not alarming people? We're not seeing a mass exodus.
I mean, the figures that governments are talking about is something between 3 to 5%. And this is way below the average of 20% that we have, for example, in Europe. So I don't think that we're talking about scary numbers as such. There's also discussion of on what will VAT be imposed. They're not going to impose it on every type of good or service. There's a thinking, for example, to say let's begin with luxury goods. So if your Ferrari costs 3% more, I don't think that will necessarily hurt you if you're already paying that amount of money for a car. But if it's on food stuff, that maybe the choice will be not to impose VAT, because they say we need to ensure that food stuff is accessible to everyone and that pricing is kept at a certain level.
What kind of timeline do you think we could be looking at for something like VAT?
One thing is clear. The legislative drafting has been done. That is ready, and also the planning for the whole technical infrastructure to impose VAT. So all the pieces are ready. And so far, I would not say that it would take necessarily too long, maybe 3 years, something like that. What
about corporate tax as well? Do you think that's something that could be more effective at a business level?
Look, now corporate tax.
Because there are some corporate taxes already in place.
There's oil and gas, 55% I think in Dubai, and for banking services 20%, and a few other industries also slightly taxed. But UAE in principle and Bahrain are the only two GCC countries that do not have corporate tax or personal income tax. No countries have personal income tax. All other GCC countries do impose corporate income tax on overseas companies generating revenues and profits in their countries, which range from 10% in Qatar to 20% in Saudi Arabia. So that's the range we're talking about. I don't see that it would be a huge problem, for example, for the UAE to introduce a corporate income tax on overseas companies. So I'm not even talking about local companies, I'm talking about overseas companies generating revenues here. That should not be a problem. And let's say it would be 5%, even 10%. Would they stop doing business in this amazing city? I doubt it.
Do you think they will? You don't think it would cause them to look at potentially other places in the region?
I don't think so. Dubai, interest of where you want to put your foreign direct investment is not only tax rate. It is the infrastructure, it is the accessibility, it is the pool of knowledge and know-how and people that you have. Dubai has all of that.
Particularly, I guess, as we move towards projects like Expo 2020, do you think that will be something that helps with funding, or this will be more just about balancing things?
No, I mean, look, Expo 2020 in itself, of course, there's a large part to be played by the private sector and investors from the private sector, but the government also has to invest a lot of money into that. And there has to be that funding coming from somewhere. And so far, yes, it makes sense to tax that. But that benefits all of the people working and living and interacting with Dubai. So Expo 2020 is good for everyone, then why not pay a part of it?